recently there have been many amendments which have taken place under the Limited Liability Partnership or the LLP Act and the LLP regime, and some of them are in a way like providing relief. There are some which have introduced new concepts for LLPs. There is also a new version of the Ministry of Corporate Affairs portal, which has been made available for LLPs. So it became very important and at a very right time that this session has been conducted. Most of those amendments are now becoming applicable with effect from 1st April 2022, which is just 2 days from today, the day when we are having this session. So this is about the amendments, and I also take this opportunity to thank my colleague CS Kaushik Bhai Javedi ji, who has introduced me, and for his constant support and backing for the same. And with this, we'll start this presentation. Before we get into the amendments, something about the limited liability partnerships. This concept of a limited liability partnership was introduced under the LLP Act. A separate act was brought in for the purpose of limited liability partnership in 2008, the LLP Act of 2008, which defined partnership as this LLP as partnerships having limited liability, and it was brought in a way to balance it out. On one hand, we had the partnership firms with wherein partners had unlimited liability, and on the other hand, we had the private limited companies. So it was thought at that moment to introduce a new form of corporate entity, which is the limited liability partnership, which on one hand has the benefits of the partnership firm, and on the other hand, it has the benefit of a corporate entity, which is a private limited company. So a concept of LLP was introduced in India at that time. Very brief features, if I would say, about the LLP. In a way, LLP, as I said, brought about a balance between the partnership firm and the corporate entity. It gave an opportunity to the entrepreneurs who wanted to start a business to incorporate a corporate entity in a way, I would say, because LLPs had to be incorporated under the LLP Act, separate certificate of registration and LLP IN, the identification number was given to all the LLPs. Also, the feature of a perpetual succession, which is one of the features of private companies, was also which LLPs could enjoy. It could enjoy, the partners could have a limited liability. The personal liability of the partners was limited to the amount of contribution, and also without any minimum contribution requirement. In those days, private limited company required a minimum paid up capital of 1 lakh, but that was not the case for LLPs. Without any minimum contribution requirements, LLPs could be incorporated in those. So that is how LLP was introduced. It is governed by the LLP Act. Partnership deed, just like we have in partnership firms, there is a deed for LLP as well. This deed is the main governing document for LLPs. This deed contains the terms and conditions. Briefly, if I would say, what does a LLP deed contain? An LLP deed can contain the name, the jurisdiction of the registrar of companies wherein this LLP would be applicable. For example, if the LLP, the registered office is in Mumbai, then the jurisdiction would be registrar of companies Mumbai. The activity, very important, what activity the LLP would be carrying out. The third point which is mentioned here, the mutual rights and duties of partners. The LLP deed has to contain these as well. Like, for example, which decisions would a single partner can take, probably which decisions would require a simple majority, which decisions would require special majority. Likewise, rights, duties, liabilities, everything the LLP deed has to mention. If in case such rights and duties are not mentioned in the LLP deed, then there is this first schedule to the LLP Act 2008. This first schedule under section 23 subsection 4, which contains the mutual rights and duties. So if the LLP deed does not contain this clause, then the same is to be taken from the first schedule. The main objects, the activities are mentioned. There are minimum 2 designated partners who have to be individuals who are required to form the LLP, and 2 partners which can be either individuals or body corporates. Body corporates, the word is body corporates. So whether an HUF can be a partner. No, there is a separate NCA circular that HUF is not a body corporate. Therefore, an HUF cannot be a partner. An individual or a body corporate, which is an entity which is incorporated, can become partners in a LLP. There is a separate recognition not only in the LLP Act, there is a separate recognition under income tax laws as well, which is available for LLPs. There is a separate taxation regime as well. It is taxed similar to the partnership firms. It has a limited liability, which we have discussed, very important, which is one of the major benefits of LLP. And one, in a way, I would say a disadvantage when compared with a partnership firm. One of the disadvantage would be that there is a requirement of annual filing, which is not required for a partnership firm, but for a LLP. This requirement of annual filing is there. There is this annually form LLP 8, which is a statement of solvency, which basically is the financial statements, and form 11, which is the annual return. So these are the minimum required annual filings which are to be done for LLPs. And of course, any changes in particulars of deed, any changes in partners, then the same also have to be filed. So these filings which are required annually, which form a part of this annual compliance, so that is in a way a disadvantage with respect to partnership firm. So this was briefly about the LLPs. So now we will come to the amendments. Amendment Acts. One is the LLP Amendment Act and one is the LLP Amendment Rules. Both have been introduced recently, and the LLP Act has been introduced, and certain sections of the LLP Amendment Act have been made applicable with effect from 1st of April 2022. Brief gist is given in this slide. If we see that the definitions in the Act have been aligned with the Companies Act 2013. So what had happened was that LLP Act of 2008 provided certain definitions, certain clauses, which were in line with the Companies Act 1956 at that moment. So it has been almost like 7 years now that Companies Act 2013 has been in force, and still till date the old definitions are still in force. So what this Amendment Act did, one of the very important clause is that the definitions were amended in line with the provisions of Companies Act 2013. Of course, certain provisions of the Companies Act 2013 were also made applicable to LLPs. We will cover the same in the subsequent slides. So first was the definitions which have been aligned with that of the Companies Act, which would include the definition of a body corporate, which has been defined, a regional director has been defined, register of companies, the definition has been amended, the name approval provisions, all the name approvals are now under the jurisdiction of a centralized registration center. So accordingly, whether it is a company or whether it is a LLP, the CRC, the centralized registration center, CRC, handles all the names and the incorporation related compliances. So now the definitions were suitably amended to provide for the same. There is a concept of small LLP which has been introduced. We will discuss in more detail. Small LLP means contribution which does not exceed 25 lakhs or such higher amount not exceeding rupees 5 crore as may be prescribed. So currently the contribution up to rupees 25 lakh is a small LLP. Provision has been made. The government can prescribe certain additional amount up to rupees 5 crore for contribution. And similarly, turnover criteria in the immediate preceding financial year not exceeding rupees 40 lakhs. So currently it is 40 lakhs, but there is a provision where government can prescribe certain additional amount or like a higher amount not exceeding rupees 50 crore. So this is a small LLPs. Penalty provisions amended. This is another important critical amendment which has taken place. We will discuss in more detail in subsequent slides. NFRA has been given powers to prescribe accounting standards and auditing standards for LLPs or class of LLPs. Again, an important point, just like Companies Act, we have Schedule 3, we might have in future separate AS or auditing standards. The provision for the same has been made. We will discuss again in detail. Startup LLPs have also been defined, just like small LLPs, and penalty provisions for small LLPs and startup LLPs are restricted to rupees 1 lakh for LLP for the LLP and 50,000 for the partner. Beyond that, penalties cannot be levied for a small LLP and a startup LLP. So this was a gist. Now we will cover each aspect of the LLP Amendment Act in greater detail. So starting with this Amendment Act, the key amendment, first of all, is that 11th February 2022, this notification was issued wherein section 1 to 29 of the LLP Amendment Act of 2021 was brought into effect and would be applicable with effect from 1st of April 2022, 2 days from now. So that is the introduction of this and the date from which it shall be effective. Definition of business. The business definition was amended, and in a way it has increased the scope of the definition. The business includes every trade, profession, service, and occupation except any activity which the central government may by notification exclude. So this definition has been made effective, and it has increased the scope. Resident of India definition, again another important clause. Section 7 subsection 1 explanation. Why it is required is that a designated partner, at least one designated partner, has to be resident in India. Otherwise, the LLP cannot be incorporated. So up to now, the minimum requirement of a resident in India, the number of days residing in India, was 182 days. That 182 days has now been reduced to 120 days. It is another this in a way a relief for the LLPs that if the concerned designated partner is in India for 120 days during a relevant financial year, then the person would be considered as residing in India for the purpose of LLP Act. So this is another important amendment. Next, as we discussed about the small LLP definition, the definition which has been amended, and twofold criteria has been introduced. Contribution does not exceed 25 lakh rupees or such higher amount as may be prescribed up to 5 crores. So currently contribution limit is 25 lakhs, and turnover immediately preceding previous financial year. So we are currently in 2021-22. So the financial year ending 31st March 2021, we have to take into account that that particular turnover for this criteria. For this, the turnover criteria does not exceed rupees 40 lakhs or such higher amount not exceeding rupees 50 crore as may be prescribed. So 25 lakh and 40 lakh. 25 lakh contribution, turnover 40 lakhs. It is both the criterias. If anyone is exceeding this, then the LLP will not be considered as a small LLP. That has to be kept in mind. And also for a LLP, so now this would imply that under the LLP Act, there was an audit requirement. Contribution up to rupees 25 lakh or turnover up to rupees 40 lakhs was not required to be audited under the LLP Act. So we can now imply safely that a small LLP would not be required to be audited under the LLP Act. Of course, under other respective acts, the audit provisions would be accordingly applicable. But for LLP Act, a small LLP would not be required to be audited. Names which are not allowed. Undesirable names, which is in a way, I would say now next few amendments which have been introduced and which we will be discussing are about provisions which were applicable under the LLP Act, but there was some deviation with respect to Companies Act. So now what has happened is that in a way some definitions or some criteria has been amended in such a way that now these clauses are in line with the provisions of the Companies Act. So next few slides are such wherein the provisions have been made applicable in line with the Companies Act 2013. One of the provisions is about the name approval criteria. There are multiple criteria. One of such is the left part of it is that the earlier thing, the earlier clause, and the right part is what has been amended, what is currently applicable. So the earlier clause in the left part is that the name which are not allowed was that identical or too nearly resembles to that of any other LLP or a company or a registered trademark. That has now been amended to no limited liability partnership shall be registered by a name which in the opinion of the central government is identical or that is the same. The clause 2 and 3 is the same, that too nearly resembles that of any other LLP or a company or a registered trademark. But now the central government also, in the opinion of central government, is identical. Here central government means the centralized registration center. So that accordingly has been made effective and the role of CRC has been introduced through this amendment. Next is change of name of a limited liability partnership under section 17. Here it is a twofold criteria. If it is a non-trademark case, that there is no trademark which is similar, then in case of a same name wherein it is a non-trademark case, the central government, again here central government meaning the CRC, Centralized Registration Center, the CRC may direct to change the name within 3 months. If at all a name is approved and it has proceeded to incorporate, then within 3 months from the date of such approval, if it is found out that this is similar to an existing name, then the central government, the CRC, may direct to change the name within 3 months. And if it is a trademark case, and so such a name, if it is there, then trademark owner can make such application within 3 months from the date of incorporation. If such LLP, it is found that such LLP is has been incorporated which is similar to a registered trademark, then the owner of the trademark can make the application and can request the change of name. Section 18, which has been omitted, which was application for direction to change the name in certain circumstances, but this section 17 covers all such cases, therefore section 18 has been omitted. Accounting standards for class of LLPs, which we have discussed in the gist as well, the earlier gist slide. The central government may, in consultation with the NFRA under section 132 of the Companies Act 13, may prescribe standards of accounting, standards of auditing as recommended by the ICAI for a class or classes of a LLP. So again, this provision has been made in line with that of the Companies Act 2013. Currently, there is no separate disclosure standards, accounting standards, auditing standards. Currently, there are not there, but this amendment in a way empowers, gives the powers to NFRA to prescribe such standards. So like we have Schedule 3 for Companies Act, wherein full disclosures have been prescribed, we might have in future such disclosures, specific disclosures for LLPs as well. Such powers have been given to the NFRA. Provision has been made in line with that of the Companies Act 2013. Again, regarding compounding of offenses, this also, the amended portion has been has been included in bold. So this only the what content which is there in bold has been amended. Remaining of the section is the same as earlier one. The section says that the regional director or any other officer not below the rank of regional director authorized by the central government may compound any offense under this, which is punishable with fine only. For compounding of offense, only where monetary penalty is prescribed, only such offenses can be compounded. and the sum which may extend to the amount of maximum fine provided for the offense, but shall not be lower than the minimum amount provided for the offense. That is another important point, that compounding of offense, the adjudication of penalty cannot go beyond the maximum fine prescribed and cannot also go below the minimum fine prescribed. So if the section says that for this offense minimum 5,000 rupees would be levied on the LLP, and for which may extend up to rupees 50,000. So the regional director or the officer who is adjudicated, the regional director can levy a penalty from which is between 5,000 to rupees 50,000. That is at the discretion of the regional director, which would depend from case to case basis. Any other officer not below the rank of regional director authorized. So as on date, the regional director is authorized by the central government. Maybe we may come up with the central government may come up with other specific rules or regulations for same, but as on date it is the regional director. And now the portion in bold which is amended, it is hereby clarified that any second or subsequent offense committed after the expiry of period of 3 years from the date on which the offense was previously compounded shall be deemed to be the first offense. This provision was already in place under the Companies Act 2013. It has now been made applicable to LLPs, wherein if an offense is compounded in, say, in the current year, which is 2021-22, then for 3 years that same offense cannot be compounded. That if that offense again takes place after 3 years, then that compounding would be possible. So till 3 years, it would not be possible to be compounded. That offense would not be possible to be compounded. So this is the meaning, that period of 3 years from the date on which the offense was previously compounded shall be deemed to be the first offense. Offense committed during 2021-22 till 2024-2025, that this compounding of the similar offense would not be possible. Every application for compounding of offense shall be made to the registrar, who shall forward the same together with his comments thereon to the regional director. This application is to be filed with Form 31 of the LLP, Form 31. The compounding or application has to be filed. So even before that, the offense, the underlying offense for which compounding is being sought, that offense has to be made good. Thereafter, the application has to be prepared and submitted along with Form 31, and also physically the application entire set has to be submitted physically to the office of the jurisdictional registrar of companies, which would then be forwarded to the concerned regional director for further process. Next is the Limited Liability Amendment Act, the punishment for contraventions of Section 7, 8, and 9. Now this slide and and some subsequent slides now, these would be dealing with the changes in the penalty provisions. Now in some cases penalties have been increased, in some cases penalty has been decreased, in some cases there are certain imprisonment provisions which have also been amended. So till now we were discussing about some amendments which were made in line with that of the Companies Act. From this slide till next few slides, now we will be discussing the penalty provisions which have been amended. The left part of is the situation before the amendment, and the right part of the slide would be the position which is after the amendment. So before the amendment, what was it? Under Section 10, if the limited liability partnership contravenes the provisions of subsection 4 of Section 7, that Section 7 deals with consent to act as a designated partner. At the time of incorporation or at the time of appointment of the designated partner, this consent is to be obtained. So this section deals with that. And subsection 5 of Section 7, which is individual eligible to be the designated partner. Section 8, which is a liability of the designated partner, or Section 9, which is changes in designated partner. So at the time of incorporation or at the time of any changes, this consent to act as designated partner is to be obtained, or At the time of changes in designated partner, also the changes have to be filed in LLP Form 3, Form 4. We will discuss in subsequent slides. These changes. So if there is any contravention under this section, then such liability, such LLP and every partner shall be liable to fine, which shall not be less than 10,000 rupees, but which may extend to 1 lakh rupees. This was before amendment. So now what they have done is that they have now amended the penalty provision. That is that liable to a penalty of 10,000 rupees, and in case of a continuing contravention, with a further penalty of 100 rupees for each day after the first during which such contravention continues, subject to maximum of 1 lakh rupees for the limited liability partnership and 50,000 rupees for every partner of such LLP. So this is how they have done. They have now made it a continuing contravention. So this care has to be taken, whereas they have kept the minimum of 10,000, but in case of continuing, they have increased 200 rupees per day, subject to maximum of 1 lakh for LLP and every partner as well 50,000. This is the general. And second, if the limited liability partnership contravenes provisions of subsection 4 of section 7, which is consent to act as designated partner, such LLP and every designated partner is liable to penalty of 5,000, and in case of continued contravention, further penalty of 100 rupees per day after the first during which such contravention continues, subject to maximum of 50,000 rupees for LLP and 25,000 rupees for every designated partner. This would be important at the time of incorporation specifically, and at the time of changes in the designated partner, wherein a designated partner is appointed. At the time of when such designated partner is appointed, if such a consent under section 7 is not obtained, then this would be the penalty levied both to the LLP as well as to the designated partner. And for continuing offense as well, 100 rupees per day have been prescribed now. And secondly, now this subsection 5 of section 7 and section 9, which is changes in designated partner, then the penalty which has been prescribed is 10,000 rupees, and in case of continuing contravention, a further penalty of 100 rupees for each day after the first. So as we can see, the minimum penalty has been prescribed, and then continuing contravention, this has been made into a continuing contravention now, 100 rupees per day. In a way, I would say that that discretion which was there, that minimum 10,000 to 1 lakh rupees, that discretion has been removed, and based on number of days, the penalty would be levied. Next is the registered office of limited liability partnership and change therein. Again, penalty clauses have been amended. Why is this important? This clause, just like in Companies Act 2013, every limited liability partnership is required to have a registered office capable of accepting notices, and also it should be an active physical premise. Similar to Companies Act, this clause is there in the limited liability partnership as well. So here, if there is any contravention in under the registered office, then before what was there, before amendment, the clause said that the LLP and every partner shall be liable to a fine which shall not be less than 2,000 rupees, but which may extend to 25,000 rupees, unless again there was a discretion that minimum 2,000 up to 25,000 for LLP as well as partners. But after the amendment now, if any default is made, then LLP and every partner shall be liable to 5,000 to a penalty of 500 rupees for each day during which the default continues, subject to maximum of 50,000 rupees for LLP and every partner. Very important, the minimum has been removed, but 500 rupees for every day. Daily penalty has been now prescribed for registered office as well. Section 21 is publication of name and limited liability. This penalty clauses. Again, penalty clause has been amended. What is publication of name? Just like in Companies Act 2013, an LLP has to publish its name on every invoice, letterhead, and every document, and also in the nameplate. Just like we have in Section 12 of Companies Act 2013. For LLPs as well, the name of LLP, the registered office address, the LLP identification number, these details have to be mentioned on each document of the LLP. What are the penalty which has been prescribed? Before amendment, the penalty was fine. It was not a penalty, it is a fine. The word used is a fine, which shall not be less than 2,000 rupees, but which may extend to 25,000. But now, after the amendment, it is that LLP shall be liable to a penalty of 10,000 rupees. That discretion again has been removed here. The maximum penalty has been reduced, but it is a standard now that 10,000 rupees will be levied if any contravention under publication of name as is found. Another very important clause, registration of changes in partners. Again, if there is any change in partners, for example, there is any resignation, appointment, retirement, death, or any other changes in particulars, then section 25, again penalty clauses have been amended. What was there before the amendment? If the LLP contravenes the provisions of section 2, contravenes the provisions of subsection 2. What does subsection 2 say is that notice regarding becoming or ceasing to be a partner or change in address of partner by LLP. As we can see, not only appointment or resignation, but also change in the details, change in address of partners by LLP. If that clause is contravened, previously the penalty was shall not be less than 2,000 rupees, which may extend to 25,000 rupees again. And next was that this subsection 1, which is notice regarding change in name and address, is made. The partners of the LLP, such partners shall be liable to which shall not be less than 2,000, but which may extend to 25,000. So as we can see previously, from 2,000 till 25,000, this was the penalty which was prescribed. But now the penalty has been amended. If the notice regarding this where appointment or ceasing to be a partner, so appointment, retirement, resignation, death, if such a notice is there, then LLP and every designated partner shall be liable to penalty of 10,000 rupees. Flat penalty for LLP as well as every partner. Earlier, partner was there was a range which was provided 2,000 till 25,000, but now it is a flat. That discretion has been removed. 10,000 is the flat penalty, and this was for change of this partner, appointment, retirement, resignation, death. And if there is any change of name or address by the partner, which is a change in particulars of the partner, then such a LLP, then such a partner is liable to a penalty of 10,000 rupees. Again, that discretion is removed. Flat penalty of 10,000 would be levied. Next is that section 30, unlimited liability in case of fraud. If any fraud is noted, then what was the prior scenario before the amendment was that where any business is carried on with the intent or for such purpose as mentioned in subsection 1. What is subsection 1? That in the event of an act carried out by LLP or partners with the intent to defraud the creditors of the LLP or any person or for any fraudulent purpose. So I can say that if any activity, the LLP carries out any activity with the intent to defraud any of its stakeholders, whether any person, whether any creditors, or any fraudulent purpose. So if such a intent is there, then every person who was knowingly a party to this shall be punishable with imprisonment, which may extend to 2 years, and with a fine which shall not be less than 50,000, but which may extend to 5 lakhs. So here, imprisonment and fine both was prescribed where fraud has taken place. After the amendment, what has been amended is that the imprisonment term has been extended from 2 years to 5-year period, and a fine which shall not be less than 50,000, but which may extend to 5 lakh rupees. So the period of imprisonment has been extended from 2 years to 5 years. Next is section 60. Section 60, which deals with compromise arrangement of limited liability partnerships. Before the amendment, the section read that if any default is made in complying with the provisions of subsection 3, which is non-filing of any order made by tribunal under this section. Filing of order, any order by the tribunal or by the authorities are to be filed with the registrar of companies. If any default is made, then the LLP and every designated partner shall be liable to fine, which may extend to 1 lakh rupees. Again, there was a discretion up to 1 lakh, any fine was possible. After the amendment, that same clause wherein that non-filing of order made by tribunal, if such a scenario takes place, then every LLP or designated partner shall be liable to penalty of 10,000 rupees, which is the standard 10,000, and in case of a continuing default, a further penalty of 100 rupees for each day after the first, during which such default continues, subject to maximum of 1 lakh rupees for LLP and 50,000 rupees for every designated partner. A continuing offense has been defined here as well. So a minimum of 10,000 and thereafter 100 rupees per day. So discretion has been removed. Next is section 62, which is facilitating the reconstruction or amalgamation of limited liability partnerships. What was the scenario before the amendment was that if, again, similar to the earlier slide, non-filing of order made by tribunal. So any order which has received for reconstruction or amalgamation, if the LLP has not filed with the registrar of companies, then earlier the LLP and every designated partner was liable to a fine up to 50,000 rupees. Again, there was a discretion here that up to 50,000, any amount can be charged. Now, after the amendment, if there is any order which has not been filed, then there is a flat penalty of 10,000 rupees. And again, in case of a continuing default, a further penalty of 100 rupees for each day after the first, during which such default continues, and 1 lakh rupees maximum for LLP and 50,000 rupees for every designated partner. An explanation which has been added. Now that second explanation which has been added, a limited liability partnership shall not be amalgamated with a company. Now, what might have triggered this? There is no official word, or this is my view. It may or may not match with that of the authorities. What was happening was that there is a separate regime for amalgamation reconstruction prescribed under the Companies Act 2013. Now that provision includes a body corporate. Now body corporate is any corporate which is incorporated outside India, by whichever name called, but the condition was that that entity should be incorporated and it should be incorporated outside India. But that body corporate was being interpreted is that LLP also is a body corporate as it is incorporated. So under that, a few orders for amalgamation were passed by the tribunal, which were also challenged as well before the appellate tribunal, which was also passed. So this is what may have triggered this, to clarify that under the Companies Act there is a separate regime. So go as per that. Under the LLP Act there is a separate regime. So go as per that regime. If an LLP wishes to amalgamate or restructure itself as with the company, then first you convert yourself into a private limited company and then proceed for amalgamation. So that in a way a segregation has now been brought into effect, wherein a limited liability partnership shall not be amalgamated with the company. If any LLP wishes to do that, then first convert into a private company and then you can proceed for the restructuring. So this was about the penalty provisions which have been amended. Next we come to special courts. Now these are also certain provisions which have been made effective for LLPs. Special courts were made effective for companies, and similar provisions have now been introduced for LLPs as well. The central government may, for the purpose of providing speedy trial of offences under this act, by notification, establish or designate as many special courts. which shall consist of a single judge holding office as a sessions judge or additional sessions judge in case of offences punishable under this act with imprisonment of 3 years or more, and a metropolitan magistrate or a judicial magistrate of the first class in the case of other offences. So 3 years or more and less than 3 years. So this is who shall be appointed by the central government with the concurrence of the Chief Justice of the High Court. So such special courts may be introduced, and this clause C is that until special courts are designated or established under subsection this one of this new provision, the courts designated as special courts in terms of section 435 of the Companies Act 2013 shall be deemed to be special courts for the purpose of trial punishable under this act. So this was about the special courts which were designated, and until under LLP Act, unless special courts are separately designated, the courts which are designated under Companies Act would be considered as special courts. Briefly, the procedure and powers are mentioned under section 67B, which is again a new section which has been introduced. Procedures, very briefly, I'll just take it up. All offences specified under section 67A, which is for the purpose of which the courts are being notified, they shall be triable only by special this court or which is established or designated in the area. Where more than one special court is there, then by one of them as may be specified on the behalf by the concerned High Court. While trying an offence under this act, the special court may also try an offence under this act, which the accused may under the Code of Criminal Procedures may be charged at the same trial. So that the offence can be merged with the offence under the LLP Act as well as offence under the CRPC. So that also can be tried by the special court. The powers of the special courts are that, notwithstanding anything contained in the CRPC, the special court may, if it thinks fit, try a summary way any offence under this which is punishable with imprisonment for a term up to 3 years. So a summary trial also, the powers have been given to the special court that a summary trial can be tried under CRPC as well for the imprisonment up to 3 years, and provided that in case any conviction in a summary trial, no sentence of imprisonment for a term exceeding 1 year shall be passed. So up to 3 years, the summary trial, the imprisonment, the summary trial can take place. But in such a case, the conviction, the sentence of imprisonment cannot exceed 1 year. Provided that when at the commencement or in the course of summary trial, it appears to the special court that the nature of case is such that sentence for a term exceeding 1 year might have to be passed, or that it is for any other reason undesirable to try summarily, special court shall, after hearing the parties, record an order to that effect, and thereafter recall any witnesses who may have been examined and proceed to hear or rehear the case in accordance with the procedure for regular trial. Both way powers have been given. Offence under LLP Act can be tried, offence and can be merged with the offence under CRPC. If the punishment is up to 3 years, then summary trial is possible. But in case of a summary trial, the sentence can only be given up to 1 year, and if it seems that the sentence is increasing, the imprisonment period would be more than 1 year, or if there are such facts which have come up during the trial, then instead of a summary trial, the special court can proceed with a regular trial. So all these powers have been given to the special courts. This is a new section, again, registration offices, which has been introduced. In a way, this section has been introduced to notify the CRC, which is already notified under the Companies Act for the purpose of incorporation of the LLPs. So very briefly, for the purpose of exercising such powers and discharging such functions, the central government by notification may establish such number of registration offices at such places as it thinks fit, specifying their jurisdiction. They may appoint such registrars, additional registrars, joint registrars, deputy registrars, assistant registrars as it considers necessary for the registration of limited liability partnerships and for discharging of various functions. So basically, it is just a clause which is enabling the setting up of such registration offices, whether the ROC or whether the CRC. Payment of additional fee, again an important amendment which has been notified, and in a way additional fees have, it is a relaxation which has been provided. We will discuss in detail. What was there before the amendment? Now before the amendment was that if any document or return which is to be filed under the act has not been filed, then up to 300 days of delay such could be filed with a payment of late fee up to ₹100 per day. So this was before the amendment. What the amendment has brought about is that any document or return required to be registered or filed under this act with the registrar, if it is not registered or filed in time provided therein, may be registered or filed after that time on payment of such additional fee as may be prescribed, in addition to any fee that is payable for filing of such document or return, and different fee may be prescribed for different classes of LLPs. So what it means is that previously, before the amendment, amendment, late fees could be charged, but a heavy fee of ₹100 per day of delay was leviable, which after the amendment, in a way, I would say a slab rate has been provided, which is in line with Section 403 of the Companies Act 2013. This slide is briefly what has been amended under this. So this amendment has been notified under Section 69 of LLP Act, and this rule, by way of rule, amendment of rule, this changes has been notified. Now this slab rate has been notified for late fees. The LLPs were suffering in a way with severe late fees. In fact, I have come across such scenarios wherein the LLPs, for non-filing of this form LLP 3, which is for deed, or form 8, which is for solvency, or form 11, which is for the annual return. So if for 1 year this form, the initial deed and these forms were not filed at ₹100 per day for 3 forms, you can imagine what would be the quantum of late fees which would be charged. Many thousands of rupees, or even going into lakh. So this was the quantum of late fee which was being charged. But now with this, there is a separate additional fee which has been prescribed for small LLPs and also other than small LLPs. Up to 15 days of delay, no additional fee would be levied. For 15 to 30 days, for a small LLP, it would be 2 times. Likewise, for 30 to 60, 60 to 90, 90 to 180, and 180 to 360. So for small LLPs, it would be 2 times, 4 times, 6 times, 10 times, 15 times, and beyond 360 days, it would be 25 times of normal filing fee, which is a big relaxation if you consider ₹100 per day. Suppose, for example, there is a form 4 which is pending for filing. Assuming 300 days delay, and assuming the normal fee of say ₹200. For 300 days delay, previously at ₹100 per day, the 300-day delay would come to ₹30,000. So 30,000 and ₹200 would be the late fee for non-filing of Form 4 for a 300-day delay. Now what would be the case would be 15 times of normal filing fee, which is 200. 15 times comes to ₹3,000 plus 200, so ₹3,200. Big relaxation in additional filing fees. Likewise, for other than small LLPs, the up to 15 days it would be 1 time. Then likewise for 15 to 30, 30 to 60, 60 to 90, 90 to 180, 180 to 360, and beyond 360, it would be twice that of the small LLP. So now 4, 8, 12, 20, 30, 50 times. That would be the extent of late filing fee which would be levied. Of course, for Form 8 and Form 11, there is a separate fee for small LLPs and other than small LLPs. And also where I mentioned small LLPs, it also includes LLPs which are registered as startups. So this includes small LLPs and startup registered LLPs. This is the 246, 10, 15, 25. For Form 8 and Form 11, which is the annual filing for a small LLP, beyond 360 days, it would be 15 times of normal fee, which is assuming 200. So it would be 3,000 rupees plus 200, which is 3,200. And thereafter, it would be 10 rupees per day for delay. From 100 rupees per day, it has been reduced to 10 rupees per day. Big relaxation. And also for other than small LLPs, 30 times the normal fee. For 360 days, it would be as per this slab. Beyond 360 days, it would be 30 times the normal filing fee. Assuming 200 rupees, 30 times would be 6,000 rupees. So 6,200 plus 20 rupees per day delay, down from 100 rupees per day from day one. So this is about the late filing fees. This would be, of course, applicable with effect from, again, 1st April of 2022. Now, the jurisdiction of tribunal as well as the appellate tribunal, this also now has been made in line with the this Companies Act 2013. Earlier, as we can see before the amendment, it referred to certain sections of the 1956 Act, which is no longer in force. Section 10FQ, 10FZA, and all, so on and so forth. So now, after the amendment, what is the scenario is that any person aggrieved by an order of tribunal may prefer an appeal to the appellate tribunal, provided that no appeal shall lie to the appellate tribunal from an order made by tribunal with consent of the parties, and every appeal preferred under subsection 2, which shall be filed within a period of 60 days from the date on which copy of the order of tribunal, and further 60 days extension may be given on sufficient cause. So again, tribunal and appellate tribunal means the NCLT and NCLAT, which are in place for companies as well as now LLPs. So this has been made in line with the current scenario, and the old references to old sections have been removed. Section 73 has been omitted by the Amendment Act, which states for the penalty for non-compliance of any order passed by the tribunal. This section is fully omitted because it is redundant now. And there is a general penalty provision as well, which has been amended. What was the scenario before the amendment? Any person guilty of an offence under this act for which no punishment is expressly provided shall be liable to a penalty which may extend to 5 lakh rupees, but which shall not be less than 5,000 rupees, and with a further fine which may extend to 50,000 rupees for every day after the first, after which default continues. 50 rupees for every day. Okay. 50 rupees for every day. After the amendment, what is the scenario is that if a limited liability partnership or any partner or any designated partner or any other person contravenes any provisions of the act and rules made thereunder, limitation or restriction subject to any approval, sanction, consent, recognition, direction, or exemption in relation to this, for which no penalty or punishment is prescribed anywhere in the act, the LLP or a partner or designated partner or any other person who is in default, penalty of 5,000 rupees, and in case of a continuing contravention, further penalty of 100 rupees for each day, subject to maximum of 1 lakh rupees. This is what it is. A continuing default, it has been increased from 50 rupees to 100 rupees per day, and instead of which may extend to 5 lakh, it has been reduced to 1 lakh rupees. So in a way, relaxation minimum of 5,000 can extend up to 1 lakh rupees, and 100 rupees for each day of default. Continuing offense has been notified here. Next is the jurisdiction of courts. The courts which have been notified, the jurisdiction is that the special court referred to in clause A of subsection 2 of section 67A, that is a single judge holding office as a sessions judge or additional sessions judge in case of offenses punishable under this act with imprisonment of 3 years or more. It shall have jurisdiction and power to impose punishment under section 30 of the act Criminal cases against LLP or partners or DP or any other person in default filed under this Act and pending before the court of judicial magistrate of the first class or metropolitan magistrate shall be transferred to the special court. So this is in line with what was notified earlier, that the special court can also try the offence not just under the LLP Act but also under the Criminal Procedures Code. So, and notwithstanding any provision to the contrary in any act for time being in force, the judicial magistrate of the first class, or as the case may be, the metropolitan magistrate shall have jurisdiction to try any offence under the Act and shall have power to impose punishment in respect of the said offence. Next is cognizance of offences, which is another new section, that no court other than the special court referred to in section 67A shall take cognizance of any offence punishable under this Act or the rules made thereunder, save on a complaint in writing made by the registrar or by any officer not below the rank of registrar duly authorized by central government. So registrar can take cognizance of the offence. Next is the new section again, which is the power to remove difficulties, that notwithstanding anything contained in subsection 1, if any difficulty arises in giving effect to the provisions of this Act as amended by the Limited Liability Partnership Act by any order published in the official gazette, make such provision not inconsistent with the provision of this Act as may be necessary, or that no such order shall be made under this after the expiry of period of 3 years from the date of commencement of LLP Act. This is just a power which has been given up to 3 years, that any order to remove any difficulty can be passed, which is not inconsistent with the provision of this Act. And the transitional provision under section 81 is omitted because it was based on 1956 Act provision. Again, it has been made in line with the scenario which is currently in place. So this was about the Amendment Act, the LLP Amendment Act, which was introduced. And as we saw, there were certain provisions which were made in line with that of the Companies Act 2013. In certain cases, the penalties were notified, the discretion was removed, special courts were notified, the jurisdiction was defined. Lot of changes and majority of changes, and all of these changes are now being made applicable with effect from 1st of April. And now we will jump to the next part of the presentation, which is the provisions of Companies Act 2013 made applicable to LLPs. Again, the order which was dated 11th February 2022, the MCA has notified a certain sections, which is section 90, 164, 165, 167, 206, 207, subsection 3, 252, and 439. These sections shall apply to LLPs with the modifications which are specified. What are these sections? Very briefly, 164, which deals with disqualification of the director. 165, which deals with number of directorships. 167 deals with vacation of office of a director. 206 subsection 5 deals with power to call for information, inspect books, conduct inquiries. The local ROC are given such power to conduct any inquiry. 207 subsection 3 deals with conduct of inspection and inquiry, again which is relating to 206 subsection 5. 252 is appeal to the tribunal. 439 is offences to be non-cognizable, and 90 is register of significant beneficial owners in the company. What has been made applicable? Let's go through now. The provisions of Companies Act which are made applicable to LLPs. Now, what the MCA did, the Ministry of Corporate Affairs, what it did was that it made these provisions applicable to LLPs by giving certain amendments. So wherever directors were mentioned, the word designated partner was substituted. So in a way, there was no fresh amendment act which was introduced, but this by way of such changes, by way of these amendments, instead of directors, now designated partners would be read in case of LLPs. By such notification, these provisions were made applicable. And the governing section for the same was Section 67(1) of the LLP Act 2008. What is the amendment? Section 90, subsection 1 to subsection 11 have been made applicable to LLPs, which state that provisions relating to significant beneficial ownership applicable to LLPs register to be maintained for SBO from where LLPs receive contribution. Now, I would say that another one of the benefits of LLPs over and above the private limited companies was that it was not required for a LLP to have any share capital or issue any shares to the partners. There was also no rule relating to acceptance of deposits or from where the money is actually coming in. Such provisions were not applicable to LLPs. It was in a way a preferred mode for doing business. As we discussed, that it is a hybrid mode which combines the benefit of partnership firm as well as a private limited company. But with this, now the government wishes to know that ultimately who is the ultimate beneficial owner of the said contribution amount. If the contribution is not being received from an individual, then who is the ultimate individual whose money is being introduced into the LLP. So now this beneficial ownership provisions which are applicable to companies have been made applicable to LLPs as well. The register of the beneficial ownership is to be maintained, and currently it is not in place, but there is a chance we may come up with a return as well of beneficial ownership like we have for companies. It may or may not be introduced, we cannot say, but currently this register has to be maintained for beneficial ownership. Section 164, subsection 1 and subsection 2 have been made applicable to LLPs. What does this section provide? The designated partners would be disqualified for non-filing of returns and statement of solvency for a continuous period of 3 years. Disqualified for 5 years. It is in a way a very serious consequence which has been now made effective to LLPs as well. Till now, there was no provision for disqualification of a designated partner for non-filing of annual return or statement of solvency. But for 5 years now, the designated partner would become disqualified, and also we will read earlier that vacate the office of designated partner. Just imagine the scenario that a person is already a designated partner or a director in his own business which is going on well, and he is also associated as director or designated partner in other businesses as well. Now in one such entity, whether a company or LLP, one such entity fails to file the annual return or the financial for a continuous period of 3 years due to whatever reason, XYZ, it may be a genuine reason, it may be whatever reason. In such a scenario, such a designated partner or a director would become disqualified, probably due to no fault of his or her, I don't know, but then such designated partner or a director would become disqualified and would have to vacate the office in all such entities for a period of 5 years. This is the provision which has been made applicable to LLPs. First lot of the directors and designated partners who were disqualified was made active again on 31st of October 2021. What was required was that such directors who were made disqualified, they just had to update their KYC and again file DIR 12 in all the companies wherein such directors were associated. So similar provision now has been made effective to LLPs as well. Very important. Section 165, What the section 165 says that limit on number of LLPs in which the designated partner can be appointed. 20 limit has been set, which is similar provision is also there in Companies Act 15. Here it is 20 for designated partner. A single designated partner can be associated in 20 LLPs, and if there is a contravention, the fine of 5,000 up to 25,000 has been prescribed. Section 167, which we discussed, vacation of office of designated partner is made applicable. So if there is any disqualification for non-filing of the returns, then such office of the designated partner would be vacated. Next is 206 subsection 5. The central government may direct inspection and investigation of books of accounts and papers of the LLP. This also has been made effective. The 207 subsection 3 also, the registrar shall have powers of civil court for inspection and inquiry. So all the powers of a civil court shall be available with the registrar of the of companies. The inspection and investigation would be made applicable to LLPs as well. Section 439, offense is to be non-cognizable. So these provisions have been made effective LLPs. Next we come to the amendment rules. We discussed the Amendment Act. We discussed the provisions of the Companies Act 2013 made applicable to LLPs. Now, last but not the least, we will have now the amendment rules which have been notified by the MCA. What are the LLP amendment rules? This is the Limited Liability Partnership Second Amendment Rules of 2022. The MCA notification dated 4th March 2022 has notified the LLP Second Amendment Rules of 2022 to further amend the existing Limited Liability Partnership Rules 2009, which shall come into force from the date of publication. To give effect to the amendment, the provisions which have been amended under the Amendment Act, the rules also have been notified. First rule, very briefly we will discuss. First rule, the second proviso, the word for the word 2, the word 5 is substituted. What it means is that there is a Philip form. We will discuss that as well. For incorporation of LLPs, there is a Philip form. Till now, till the date of the notification of these rules, two designated partners or partners could obtain the DIN number through Philip form. What is the Philip form? It is a form for incorporation of limited liability partnership, FILLIP. So this is the in a way abbreviation of form for incorporation of limited liability partnership, Philip. It is a form which is introduced under the ease of doing business for ease of incorporation. Instead of multiple forms, a single form now can be filed for incorporation. Previously, we had a separate requirement wherein DIN of the partner had to be obtained separately, but now it was incorporated under Philip form, wherein up to 2 designated partners or partners could obtain their DIN number with the Philip form at the time of incorporation. Now that 2 has been increased to 5. So in a way of it is a further boost to ease of business, wherein now up to 5 DIN can be obtained. Next is Rule 16, which has been amended, is that what is inserted is that shall mention permanent account number and tax deduction account number issued by Income Tax Department. This is again an amendment which is made in line with the provisions of Companies Act 2013. The certificate of incorporation of the limited liability partnership shall be issued in form number 16, which shall mention the PAN number and TAN number. So at the time of incorporation itself, now the PAN and TAN of LLP shall be obtained. Again, it is a step in the direction of ease of doing business. Rule 19, which has been amended, the person making the application shall attach the copy of incorporation certificate of the LLP or the company or the registration certificate of the entity, as the case may be. Wow. So via this amendment, the requirement of attaching the authority under which such person is making application under Rule 19 is taken down. This is this amendment. Next two amendments deal with the insolvency resolution process, which is that where in a corporate resolution process, where such a process has been initiated against the LLP under the Insolvency Bankruptcy Code, in that case, the statement shall be signed on behalf of the limited liability partnership by the interim resolution professional or the resolution professional. So this was made to like ease the compliance part of this process and also make it in line with the provisions which are in place. Prior to this amendment, in cases where CIRP has been initiated against an LLP, the statement of account on solvency may be signed by interim resolution professional or resolution professional or the liquidator or the LLP administrator. So instead of that, now the interim resolution professional or the resolution professional can sign and can carry out the necessary compliance. Next new rule which has been inserted, Rule 25 sub Rule 2. The proviso has been that the where a CIRP process has been initiated against the LLP under the IBC or the LLP Act, having turnover up to 5 crore during the corresponding financial year or contribution up to 50 lakh rupees. Such LLP, 50 lakh, 5 crore. Such LLP has come under liquidation under the code or the act. Then the said annual return may be signed on behalf of LLP by the interim resolution professional or the resolution professional or liquidator or the LLP administrator, and no certification by a designated partner is required. Up to this turnover and this contribution criteria, the certification of designated partner is being removed, and only this signature of the resolution professional, the CI, the interim resolution professional liquidator is enough. Next is there are certain rules which have been substituted. There is Rule 34, this sub Rule 3 to C. For the words and figure 29, the word and figure 28 has been substituted. So now form number 29 LLP is merged into form 28. Form 29 was filed for alteration of certificate of incorporation, alteration of names and addresses of person authorized to accept service on behalf of foreign LLP, alteration of the principal place of business in India of foreign LLP, or cessation to have a place of business in India. So in such cases, Form 28 was filed if there was any alteration. In case of a foreign LLP, now that Form 29 is merged into Form 28, so together the same can be filed. New Rule 36 sub Rule 6 has been introduced, wherein after the sub Rule 7, the words and figures Form 32 shall be inserted. So reply to registrar under sub Rule 36, Rule 36 sub Rule 6 is now to be given in Form 32. And there is substitution of Rule 37 sub Rule 1A Rule 2 for the words enclosed with Form 24, the words and figures furnished in Form 24 shall be substituted. So it is just a correction of error which was present. These were about the amendment rules. Till now we have covered the Amendment Act, the provisions of Companies Act made applicable to the LLPs, and the amendment rules. Now we come to another very significant update, which is the new version of of the MCA portal for LLPs. Why it is important is that there is a version 3.0 which has been introduced for the limited liability partnerships, wherein all the changes have been for the time being introduced for the LLP, and for the companies it might be there in it might be further introduced in due course. So it is very important. Currently also it is in process. It is currently in transition. So let us study briefly about this version 3.0. Briefly, these were the FAQs which were there on the MCA portal. So very briefly, I have made these pointers from those FAQs. That MCA version 3 was launched for LLPs. For companies, it is in pipeline. It may be launched anytime. Majority of forms which are applicable for LLPs would now become the web-based forms. So we will see what are the forms which have now been converted into web forms. Majority of the compliance requirements for LLPs would be web-based forms. The users can log in using the SIN or LLPIN for the respective company or LLPs users and email ID for other users. So just after the preparation of this LLP and before the start of this lecture, there is a separate set of FAQs which have been launched by the NCA only for the purpose of login of this version 3.0, the login FAQs. We will discuss the same. I'll read out certain critical aspects, and the FAQs are available. So these FAQs as well as the login FAQs are available for reference on the MCA portal. What are the changes? So as we said, this during incorporation now, LLP can now obtain DIN. DIN we just discussed earlier in the rules that up to 5 DIN can be obtained at the time of incorporation itself. PAN and TAN can be obtained now. The certificate of incorporation would include the PAN and TAN as well. A single Philip web-based forms can now be filled for up to 500 partners. Another important benefit of LLP from that of a partnership firm or a private limited company is that there are no limits on the number of partners, which is why LLP is a preferred mode for a service sector, including our professional sectors, chartered accountants, company secretaries, cost accountants. It is a critical aspect that there is no limit, and now a single web-based Philip form up to 500 partners you can include in that form. Web forms are to be digitally signed by the designated partners or professionals as applicable. Certain incorporation forms are introduced as linked forms, which is the Philip form we discussed, the Philip for the form for incorporation of LLP, which is there. Form 9, which is a consent form, and Form 1718, which is the form for conversion, whether conversion from LLP to private limited or whether from an unregistered entity into a LLP. So all these forms can now be filed as linked forms. What is Form 9, which is the consent? We have discussed in the earlier slide the penalty wherein this Form 9 consent is not obtained. This consent is to be now filled as a linked form to Philip, wherein all the details, even name approval, can be obtained now through a single Philip form instead of separate this run forms and other forms for LLPs. A single comprehensive form Philip for name approval, for objects, for the DIN numbers, for PAN, for TAN, for registered office, all of these criteria now, and including the consent as well, Form 9. So in a single linked form, the incorporation of LLP can now take place. Form 3, Form 4, and Form 5 can also be filed as linked form in case of changes in the LLP agreement and the designated partner. We discussed in earlier slide for penalties for wherein the changes in the designated partner was not informed to the ROC. So here it is about Form 3, which is for the deed and also for changes in deed. Form 4 and 5, they relate to changes in the partners. So they also can be now filed as linked forms. Attachment size, again very important, a 2 MB per attachment, and overall form size is now increased from 6 MB to 10 MB. Also, in a way, I mean, somewhat of a relaxation. Earlier 6 MB used to be a task to compress the documents, but now it is up to 10 MB, the same has been kept. But the per attachment size is restricted to 2 MB, which also needs to be noted. There is a EM bridge which is to be installed for DSC for the purpose of digital signature, which is like in line with the income tax and the GST portals. For resubmission of form from version 2 to version 3, the SRN would be accessed from the application dashboard. There is a separate my application dashboard. If you log into the new portal, then for any this my application would contain all the forms and applications which have been filed. So if any resubmission is there, then from there the same can be accessed. And payments now would be accepted via credit card, debit card, UPI, net banking, and also offline option through NEFT. Again, also an important amendment. NCA version 3 portal of this NCA, the LLP version 3. As we all know that the NCA, LLP version 3 has been introduced by the NCA. But the big question, how to log in to the LLP version 3 portal? How to fill the LLP web forms? So regarding the first question, the login to the LLP, these are some FAQs. I'll just go through the important ones. So first FAQ, what is the version 3 portal of the NCA? The NCA is in the process of upgrading the present version of the portal from version 2 to version 3. This is an enhanced version of version 2 portal and is presently live only for LLPs as on the date of this FAQ. The version 3 portal presently enables the following for LLPs, which is the login and user registration, the digital signature association, and the LLP form filing. What is the main difference between version 2 and version 3? So in the version 2, the forms are required to be filled and uploaded in the portal, while in version 3, the forms are to be filled online. This enables user convenience, including the ability to save half the filled form and fill it later. This option is there that a form can be saved for future reference and can be filled again later. There is a My Application panel which we discussed, that My Application feature which allows one to view all the forms filed by them till date, along with the status of the form such as pending for DSC upload, under process, payment of fees, resubmission, etc. When a user logs into version 3, the login is through the email ID, whereas in version 2 it was possible with the user ID. When a business user logs into the NCA system, an OTP will be sent to the mobile and email address to ensure authenticity of the user. Again, important point that for a business user, for every login, the OTP will be sent, and there is no difference in association of DSC between version 2 and version 3. So what about the login and registration? So who is a registered user in version 3? The registered user comprise of any individual. Such users can only perform two functions in LLP module, that is run form and fill form. So again, an important point, if you are a registered user, only the fill form and run form would be available. Other forms would not be made available to registered users. Who is a business user in version 3? A business user can be any of the following, and they can access and file all the forms. There is no change in the naming or position of a business user between version 2 and version 3. The most suitable category may be selected, which is a company or a LLP, director or a designated partner, manager, secretary, authorized representative, officer in default, or a professional. However, the professional user in version 3 was earlier termed as practicing professional in version 2 portal. Important to note. If I am an next question is, if I am an existing user, do I need to re-register once again? The answer is no. If you are an existing user in version 2, then you need not register once again. Next is, if I am a new user and want to register in the MCA new portal, then how is the registration done? Go to the tab sign in, sign up in the MCA site. There will be a button called register. In between the button for login for LLP filing and login for company filing, there will be a register button. Thus, registration can be done by clicking the button. The registration for a new user will enable you to file both the company version 2 forms and version 3 forms. Click on the register button. By clicking on register button, it will take you to the registration page. Choose the user category and user role as applicable. Refer the table provided in registration FAQs, and you will receive an email and SMS on successful registration. What information needs to be provided for registration? That is, the email ID, phone number, addresses are required for both registered and business users. PAN is not mandatory for registered users, but compulsory for business users. A company and LLP user, we need the SIN, LLP number, foreign LLP number, FCRN number. If it is a director or a designated partner, then the DIN or a DPIN is required. If it is a manager or secretary, then general inputs only. If it is an officer in default, then general inputs only. If it is a professional, then professional membership number and the professional institute. These details are required. Can a registered user upgrade to a business user? Answer is yes. Registered user can update to a business user. One must not create a new business user. What is the process? Then the sign in. There is a right hand corner which will display hello and your name. Right hand, then click on that icon, select the profile update page, click on add role and select the business role, which is a director or designated partner, a manager, secretary or authorized representative, officer in default, and the professional. I am a CA in a professional role. Can I also have a director's role in the same user ID? Answer is yes. A registered user in one user can add any other category, such as under in the above question, as one is a practicing professional, existing professional, the following category can be added, which is a director or designated partner, manager or secretary or authorized representative, and officer in default. My details have changed. How do I update my profile? Very important. The following cannot be modified. There are certain details which can be modified, but what cannot be modified is that the email ID of a director or partner, mobile number of a director or partner, address. Why so? Because it amounts to change in details for which there is already separate provisions which are in place. Next question, how do I log into the MCA version 3 filing for LLP filing? For company filing and company related services, please click on login for company filing button using your existing username password. For LLP filing and other LLP related services, please click on login for LLP filing button and login using existing username and password. So these were about the certain FAQs for login which were introduced just on the day on which this presentation is taking place. So the same can be accessed on the MCA portal, and accordingly the participants can proceed. So we have discussed about how to log in very briefly. The user needs to go to sign in or sign up link at the top right corner of the portal using existing login ID. Existing users are not required to create new login for LLP portal. The users can also use existing login ID. Once logged in, the profile needs to be updated from registered user to a business user and details need to be input. While login, kindly select the LLP login option instead of company login option. And after successfully logging in, the users would be able to fill all the LLP incorporation forms by using my application, MCA services, LLP filing, and the run and Philip option. For example, if we select the Philip option on the new portal, then such type of a form would open, and we would have to input the details one by one. That is whether the name is already approved, then the SRN number. If not, then proposed name which is there. So at every stage there would be a save and continue option, which is a benefit then that the same can be saved and exited and then can be continued from where the concerned applicant has exited. How to fill forms other than incorporation forms? As we discussed in the FAQ, only for registered users, only the Philip forms are made available. Then how to fill forms other than that? Then after successfully logging into the profile, we have to use the profile update option so that the other forms like form 3, form 4 will display. The profile update option shown in the top right corner, the users need to update his or her profile as business user and fill the required details for the same. After successfully updating the profile, the user would need to log in again using OTP, which would be sent on registered mail ID and phone number, and then submit the OTP, and the users can see all the forms. Very briefly, what are the basically web-based forms which have been made available now on the new portal? First is the Run LLP, which is to reserve the name of the LLP, the Philip form, which is for incorporation, the information regarding LLP agreement and changes, if any, then that is form 3, appointment, cessation, changes in the designated partners or partners, form 4, the order of any court, tribunal, CLB is in form 22, statement of solvency is in form 8, the consent of the partners is in form 9, annual return is in form 11, intimation for other address for service of documents is in form 12, notice for change of place of registered office is in form 15, application for and statement of conversion of firm and also to be filled with Philip, this is form 17. Conversion of firm into LLP, so an unregistered entity, unregistered meaning thereby not registered under the LLP Act, so any unregistered entity into a LLP. Then form 27 is form for registration of particulars by foreign LLP. Form 28 is return of alteration in the incorporation document, as we discussed for foreign LLPs, whether it is alteration in certificate of incorporation, alteration in names and addresses, alteration in principal places of business, or any cessation to a place of business. That is form 28. Next is application for direction to LLP to change the name. Change of name application under form 23. Next is form 32, which is form for filing the addendum for rectification of defects or incompleteness. And form number 18, which is application for conversion of a private company or an unlisted public company into a LLP. So this is about the web-based forms which are there. And for the last part of this presentation, briefly the features of version 3.0 which are proposed to be introduced, and some of which have already been introduced by the MCA. Basically, these are the features which are in pipeline or which would be introduced. E-adjudication, which is the digital transformation of the adjudication and hearings. E-consultation, which is the public consultation on the proposed amendments which are being notified. E-books, which is a digitization of acts, rules, regulations by the MCA. The data dissemination from various sources, whether it is government to government sources, whether government to business sources, and a compliance management system for compliance checks, issuing reminders, identifying defaulters, and other things. What are the basic features? During the financial year 2021-22, the Ministry of Corporate Affairs this will launch this. So during the current financial year, in a way, it has been launched and it is also in process. Some of them have been launched and some are still in process. A data analytics driven NCA 21 version 3. This version will have additional modules for e-adjudication, e-consultation, compliance management, and NCA 21 system is the first mission mode e-governance project of the Government of India. NCA 21 version 3 is a technology-driven, forward-looking project envisioned to strengthen enforcement, promote ease of doing business, enhance user experience, facilitate seamless integration, and data exchange among regulators. So the project will have microservices architecture with high scalability and capabilities for advanced analytics. What are the respective? So we discussed here that there would be these options which would be there. So what would be the feature? Very briefly, e-scrutiny, which is that there are forms, whether in Companies Act or whether in LLP, which are approved through straight-through process. If they are certified by professionals, then they are approved straight-through process. But through e-scrutiny, now those forms which are being filed, they would be now verified. So NCI is in the process of setting up central scrutiny cell, which will scrutinize certain straight-through process forms which are filed by the corporates on the NCA 21 portal. E-adjudication, very important. Just like we have now faceless scrutinies under Income Tax Act, the e-adjudication module also has been conceptualized to manage increased volume of adjudication proceedings of ROC and RD, will facilitate end-to-end digitization of the process of adjudication for ease of users. It will provide a platform for conducting online hearings with stakeholders and end-to-end adjudication electronically. So everything will be digitized online and there would be no manual interface which would be there. E-consultation, in case of any amendments which are proposed, the MCA would facilitate the e-consultation as well to automate and enhance the current process of public consultation on proposed amendments and draft rules. E-consultation module of the MCA version 21 or version 3 will provide an online platform wherein proposed amendments and draft legislations will be posted on the website for external users and comments and suggestions pertaining to the same in a structured digital format. Further, the system will also facilitate AI-driven sentiment analysis, consolidation, and categorization of stakeholders' inputs and creation of reports on basis thereof for reference of MCA. There would be a compliance management system which would assist MCA in identifying non-compliant companies and issuing e-notices to the defaulting companies, generating alert for internal users of MCA. This compliance management would serve as a technology-driven platform or solution for conducting rule-based compliance checks and undertaking enforcement drives of MCA, wherein e-notices will be issued by MCA for effective administration of corporates. There is an MCA lab as well, which is a part of the version 3. The MCA lab is being set up, which will consist of corporate law experts. The primary function of MCA lab would be to evaluate the effectiveness of compliance management system, e-consultation module, enforcement module, etc., and suggest enhancement on the same on an ongoing basis. This lab will help MCA in ensuring the correctness of results produced by these key modules in view of dynamic corporate ecosystem. Additionally, MCA version 3 will have cognitive chatbot enabled help desk, mobile apps, interactive user dashboards, enhanced user experience using user interface UX technologies, and seamless data dissemination through APIs. To sum it up, I would say that the version 3 would be facilitating the vision of the government to ensure a highly governed society in a way. If I would say that the vision of the government was that it was given by the Honorable Home Minister in one of the recent address to the professionals, wherein the Home Minister Shri Amit Shah said that किसी भी देश का विकास एक मजबूत कॉर्पोरेट गवर्नेंस के इंफ्रास्ट्रक्चर के बिना हो ही नहीं सकता. This was the push. So to build a good corporate governance infrastructure or a corporate governance culture in India, this version 3 would enable in a way to achieve that end. So this is what to build the entire end-to-end digitization, the e-consultation, the e-adjudication, all of that would build in a way a good corporate governance culture in India. So this was about the LLP amendments, which some of which already are in place, which is the MCA version 3, and some of which would be made effective from 1st of April 2022. So first question is, can PSR be based on segment revenue among partners and not fixed? PSR, I think it is as mutually decided between the partners, so that should not be a concern, and whatever is decided between the partners, the same can be included in the relevant LLP deed, and accordingly it can take place. So this is, I think, about that. So again, I think in chat box, can PSR be based on segment revenue not fixed? How to present in form? So as I said, it is based on mutually what is decided by and between the partners. How to fill up form? Uh, which form I did not understand. So next is, has LLP filing enabled on new website or still issues are being faced? So uh, about this LLP filings, as we discussed in the this FAQs as well, the filings relating to incorporation of LLPs have been enabled on the portal, and regarding the other filings, it is still in process. As per my understanding and knowledge, and also in other professional groups, we are still awaiting the filings to be enabled for other users. Probably we will have to check out these FAQs where it mentioned that we have to migrate from a registered user to a business user and update the profile. Probably once that is done, the other filings would be enabled. I think it is still in a transition stage, and it should get smoothened or ironed out in as the time progresses. And there is one which is additional fee amendment also applicable for FY 2021 pending forms. So yes, this from 1st April 2022, these additional fees would become applicable. So accordingly, whichever forms are pending based on number of days and the slab rate, the same would be calculated.